And to the new episode of the Learn and Trade with Popeye. Today I want to show you the way I trade the 3-drive pattern, since it's a pattern that I often use, and often you will find me sharing trade setup using this pattern. I thought it was cool to make a video about it. I show you also some pro tips on how I use it, a bit different than what you would find on a textbook explanation of the pattern. Before moving to the video, big thanks to ZoomeX that is sponsoring, and make sure to trade with me on ZoomeX. You will find the referral link in the description down below, and if you use this link, you will enjoy a 20% discount on trading fees, and also you will be eligible for a lot of cool campaigns that we are often running with the ZoomeX team. Also, make sure to subscribe to the channel and leave a comment and a like at the end of the video if you enjoyed it. But without further ado, let's see what is the 3-drive patterns and how we can using trading vice. So very simply put, the 3-drive patterns is a reversal pattern that might indicate in a bullish move a potential bearish reversal, and in a bearish move a potential bullish reversal. These are the two, let's say, options, but more or less the way you trade the pattern is always the same. It comes both from Elliott wave and the Fibonacci, let's say, trading, but I will try to keep it a little bit more simple and straightforward. So take the names from the 3 drives that are formed. You have the first, the second, the third drive that are creating an exhaustion of this trend, in this case a bullish trend, and at the end of the third drive you get a reversal, a trend reversal with a break-in structure, and then a downtrend developing after the 3 drives. Same happen for the let's say bullish 3 drives. In this case you get 3 lower lows, so a clear downtrend, and then after the third drive sellers are exhausted and we have a break on market structure and an uptrend resumption on the other direction. So some key component of these 3 drives are, of course, the 3 drives that should have, let's say, a structure. So the 3 drives should have the 3 higher high in this case, and the 3 lower high, sorry. And in this case, the 3 lower low follow structure-wise by the 3 lower highs. The time component is also pretty important, and we will see exception, but it's important whenever you see a 3 drive that there is a time component. Means that the time spent on each of these 3 drives should be, the textbook will tell you exactly the same. I will tell you, not to be dogmatic, to be similar. So you don't want to count a 3 drive pattern, something that does the first 2 quickly like this, and then the third one start to do something very long, different from these 2, and then you get the third drive up. So in this case, as you can see here, the time component, let me remove this to have a little bit more clarity in the chart. Let's take in both cases the bullish, let's say, move. The time component is important for the 3 drive because, as you can see, more or less the way I put it here, the time spent on all the 3 drive is more or less similar. So the 3 drive have a speed component, the 3 drive have a speed component that is more or less similar. If the drives are very far away, so if these are 3 or 4 daily candle, I don't know, you want to see the 15 minutes, are 5 15-minute candles, and then the third drives come after 60 15-minute candle or 15 daily candle, but anyhow, you got my point. The time distance is very different. This 3-day drive is somehow invalidated or much less relevant. So we will see then some example in the chart how you will see when this 3 drive happened that actually time was an important component to take in consideration. price is fractal, the tree drive can happen in any time frame. It's just important that whenever you start to watch a time frame, you follow the time component in that specific time frame. And wherever the time component is getting validated because the time occurred within each of the drives is much bigger or much smaller, the tree drive is not valid, or as I say, much less effective. The other component is based on Fibonacci, and is that the retracement and the following drive, so this move that creates the tree drive, move up, move down, move up, move down, move up, should have some distance to be respected. And by textbook would be with the Fibonacci retracement at around 68 and with the following move at around 1.27 or 1.61. So let me make it simple. The tree drive, to be more accurate as possible, should have, once you have a move up, you want to see the price retracing more or less in the golden pocket at around, I would say, to be flexible, from 0.60 to 0.75. There should be the retracement. If the retracement is smaller, probably this was not really a tree drive, or if the retracement was higher, again the tree drive is less effective. The second component is, once you have this upper move of this was let's say second drive, you have the second dip on the 0.60 0.75 level, the move that it's following should be 1.27. What does it mean? That should be 0.27 more of this move, so it should be more or less here. This move, the following wave, should be at more or less 0.77 or 0.61. In this case, I calculated in this way, is from this level. But let's say in the book you will say 1.27. So 1.27 means if this is 1 and 0 is 0.27 more. So this is the, let's say, the three major components that you have to see on the tree drive. The first one is the structure. So you want to see tree drive on a trend, bullish or, as we say, bearish. There should be 3 higher high moved with 3 higher lows. It was this one. The time component is important, so the time spent for each drive should be, the textbook say, exactly the same. I would say very similar or not too much different. And the third component is that this move on the 3 drives should more or less respect this Fibonacci retracement. But if you want to make it simple, the retracement should be more than 50% than the move, so it's at 0.60, 0.75, and the move above should be 25%, quarter more of this move above, so 0.27 or 1.27 or 1.61 of the third move. Once you have seen this move, you can expect that this 3 drive is the local high, and from here there will be a potential price reversal, and you will see later that there is 2 ways that you can trade this move. So this is the super let's say textbook explanation of what is the 3 drive. Then I'm adding what are, in my case, the tips or the pro tips that I want to add to these 4 textbook explanation: trend, time, and Fibonacci. Sorry, 3 part. The fourth component that I want to add is that if you try to see this pattern happening at key support and resistance level or key supply and demand, the possibility that this forms a local top, or in the other case a local bottom, is higher. So if this is your level of a well-known resistance level, or if this area is a supply area, then you get some further confluence that probably the price move in an uptrend to supply to resistance, and then resistance is rejecting, supply is rejecting, then is moving lower. So the first pro tip is to use the 3 drive in well-known, to try to trade them in well-known support or resistance or demand and supply. The second is the fact that we are trying to catch a trend reversal. So in a trend reversal, you want to see some momentum stalling because this is a clear uptrend. So if you are trying to catch a trend reversal, we want to see in this case bullish buyers exhaustion. So you want to see this trend dying up. So you have to add, or you can add, some momentum indicator that will tell you that this momentum, this bullish momentum that we are here, is dying up and is probable that is gonna be ending up soon and reverting. And the two key momentum indicator that I would suggest to use, that are very simple to use, are RSI, the relative strength index. So you want to see on this 3-drive move a divergency on RSI. So you want to RSI that start to flip bullish. Let's say it doesn't form any more, sorry, it's the opposite this case. You want to see the RSI that start to turn bearish, that while the price form higher highs, the RSI start to form lower highs. You can check my video here in the Learn and Trade with Popeye playlist about RSI divergence and how to use it. So if you have the 3-drive with all the specific that we said about the 3 drives happening at a supply or resistance level along with the bearish divergence, you have a further confluence. The other part that you can add to add further momentum is to see volume dying up. So instead of seeing volume continuing to go up in this move because it shows that the pressure is going up, you want to see volume moving down. So these are, let's say, the theoretical part about the 3-drive pattern. I selected some, let's say, very famous on the Bitcoin chart, but immediately you can see by naked eyes what I have explained you. You can clearly see in high time frame that this could potentially look like a 3-drive pattern, this could potentially look like a 3-drive pattern, probably this could potentially look like a 3-drive pattern, and all have signal local top and reversal. So let's try to look them. This time frame is the daily, how they occurred, and if they respected some of the rules that we said. As always in trading, I don't like to be extremely textbook, so I leave always some room for adapting and to use, let's say, your brain to see if the textbook is exactly happening as they say. If this 3-drive was this one, you can see that the first drive was this one, probably the first move from the high to the low. It retraced at around 27 and the move up to 0.27. So the first more or less move was a good one. The second one if we do again the Fibonacci was not, I can see already by naked eyes, it was not really respected because this week came down and invalidated what was happening here. But the following move, if you see, that's why I'm always saying to be a little bit flexible. The following move, the third drive, went exactly at the 1.27 or 0.27 target of the Fibonacci for the third drive. Time-wise, you can see more or less that each drive had the same distance. So if this was the first drive, was 18 bars. If this was the third drive, was 18 bars. Actually, they are almost all the same. The third probably is just a little bit longer. If this was the third drive, was 23 bars. But you see, more or less, even by naked eye, you don't need to be so fixated, so technical, that these moves are more or less happening in the same time span. Okay, here there was clearly this exception, but again, not to be super fixated with technicals, even because for us the 3 drive is more important, the upper part, no, because we are looking for a reversal of a bullish pattern. This happened in price discovery, so we didn't have any support or resistance level. As I was saying, that would be my further tips. Let's just check if RSI has given the divergence. As you can see, while price was moving in this 3 drive, RSI was lacking momentum, so price is going higher while RSI is price going higher while RSI is going lower, and probably we'll just double check. Volume was a little bit dying up, as you can see here. While in the first drive there was a lot of volume, in the third drive the volume is moving lower. So is a pretty straightforward pattern. Is not very happening very often along with all these conditions, but whenever happen, it can be pretty powerful. So in case you see one of these patterns, remember to take the trade along together with me on ZoomeX. As you can see, the ZoomeX platform is super straightforward. It has all the function of the bigger exchange. Is backed by Bit, so you will find the same liquidity on Bybit. What is super cool is that ZoomeX is non-KYC, so you don't need to provide any of your personal information. You just need an email address. You can register and you can immediately start to trade. You will find my referral link in the description below. You will enjoy the 20% discount on trading fees, and you will also be eligible to enjoy a lot of campaign that we run very regularly with the ZoomeX team. So just to show you another example that in this case was a little bit, let's say, not so clear, is this one that was the bearish. So we saw one bullish here, that is this one, and one bearish here, that is this one, 1, 2, 3, and then reversal. Why this one is a little bit discussable, let's say, or arguably not really a 3 drive pattern, if you have followed me on the video, is clearly because of the time. So while in these 2 patterns the time was limited, this third pattern here is much longer. The third drive is much longer. So in this case the pattern worked out, because we did have technically the 3 drive, 1, 2, and 3, and they created the reversal. This also happened more or less at a well-known support and resistance level. As you can see here, was previous all-time high and so on. Just there was this exception, I don't know how to call it, or variable that was a little bit different, that the time was a little bit longer. Also, that is once again the reason why you should not be extremely fixated with dogmas in trading and textbook adaptation to what is happening then in the price, in the market, and in the chart. We can see also if in this case there was a dying volume. There was the dying volume here, and then volume picked up, and probably, since it's very long, we have to go to higher time frame. There was some sort, again, this example is again one example that shows you that trading is not always straightforward. The divergence is not so clear, because here there was no divergence on the first 2, but the divergence was in the last 2 drives. So again, to show you that trading is not always black and white, but there is different movement in the price. There is the other famous one in high time frame. That is this one. No need to check it. If you want to practice, just check this on this high time frame. But you can find 3 drive, as you can see, 1, 2, 3 also here, probably different. We have this little bounce, but you can find 3 drives also in other time frame, the 4 hour, the 15 minutes, or whatever time frame you like to trade. Just remember that these kind of criteria should be more or less at least respected. Potentially here, I already posted the next, could be if market gives a good area to have a 3 drive, in case price start to do something like this. and reverse to go to come to test this area and to fill, for example, this fair value gap to give context to what's happening. So always see what the market gives you, do not predict, so just try to react to what market gives you. Just know that trade drives can be very powerful, especially if used on these with the proper, let's say, adaptation. So I think no need to keep the video too long. Just to summarize, the trade drive pattern can be either a bullish or a bearish reversal pattern, so where we have 3 bullish drives, this could conclude with a bearish move, or controversially, bullish move, bearish move, and reverse. So first part is how to trade it. So there is 2 ways to trade it. One is aggressive and one would be more conservative. The first aggressive would be to try to enter as close as possible to the third drive and to trade on the other direction. The entry can be based on the Fibonacci move, so you know that this move will arrive at around 0.27, so you see the high formed here, you use just Fibonacci extension, you move higher, and then you try to catch this entry, knife catching, let's say, this entry here, and to try to move to the other direction. You can also wait here for some local structure to break, some local small structure to start to break, and then to have an easier, let's say, entry and invalidation according to this small structure. So the first aggressive way to trade it is to try to knife catch, let's say, so it's a bit dangerous, the last of the 3 drive, is using either Fibonacci extension or, as we say, the support and resistance level that you might have selected here somewhere, because in the past here there was a resistance. You see 1, 2, you see the third drive coming to this level, so you try to enter in this level because you see the potential for a reversal. The other one that is more based on ICT or let's say other school of trading, and is, let's say, the safer entry, is the one that is based on the market structure break. So potentially you wait this trade drive to evolve, you don't do anything here on the top, but you wait physically this to happen. So you want to see this trend to break, and you want to see the structure be broken. Once this is broken, you try to enter on the following lower high and trade the move down. In this case, your trade would look something like this. You have tried to enter there. Your invalidation is somewhere here, because if there is a real reversal and this was the third drive, you don't want to see the price moving higher here again, and again you trade for a continuation lower. So both ways are okay. The second one is a little bit more conservative, even if your entry would be a bit worse than the other case. The other way to try to enter here is more aggressive. You get a better entry, but you are not sure if the trade drive is still is already in effect, or if you get a 4th or 5th drive, nobody knows what the price can do, and then you're stopped out. In this case, the more conservative, again, you can look for your entry using Fibonacci, so always try to enter around golden pocket or 0.75, or the supply that was created here before the move down that created the market structure break here. Same applies for the bullish, no need to repeat. So to conclude, remember, you need to have a 3 drive pattern. You need to have 3 drives, so bullish move, reversal, bearish reversals, bearish move, bullish reversal on the 3 drive. The 3 drive should have the component of the 3 highs and the 3 lows, and the same for the other high and lows. The time component is also very important to remember. The distance within the 3 drive should be more or less the same. Also here apply some flexibility, but whenever you see the distance becoming very long, the reliability or the possibility that the 3 drive will play out is reducing. the next component is the Fibonacci. Again, even here, do not be too much fixated, but what you want to see is that in each drive there should be a pullback more or less below 0.5 or at around 0.60, 0.75, and the following drive, the bullish drive, the move above, should be 1.27 to 1.60 above the previous one. These along the three drives. If not all the three drives will give you exactly this, again, be a little bit flexible, because price is not moving as in the books, but is move because people are buying and selling, so it's not so precise. These are the textbook, let's say, summary. Then my summary for the my pro tip is try to use the three drive in well-known support and resistance level for the resistance and supply level for the bearish reversal, and try to use support and demand area for a possible bullish reversal. So try to use the three drive where it makes sense for the price action to actually reverse, so price to be supported or price to be rejected. Final, use momentum. So you want to see buying exhaustion or selling exhaustion. You can use also other, but my suggestion is to use RSI divergency. You can check on my series of the Learn and Trade the RSI divergency video, or volume. In both cases you want to see exhaustion, so price going up, RSI stopping to go up, and volume stopping to move up. So you want to see exhaustion to add to the setup or to the pattern. Finally, two way of trading: one aggressive, try to enter on the third drive, one more conservative, wait for a market structure break that gives you a little bit more confidence that the trend is broken and we will move in the opposite side of the trend, and once you see the market structure break, then you have more confidence on the trade itself. I think is everything. Whenever you find a three drive setup, make sure to take it together with me on ZoomeX. You will find the referral link in the description below. I really hope you enjoyed the video and it was helpful. Drop me a DM or a question or a comment here if something is not clear. We'll see in the next video. Just before leaving, make sure to subscribe to the channel, leave a comment and a like. Stay safe out there, and we'll see in the next episode. Bye.